I'm going to do an in-depth review after having taken a break for quite some time without doing any for you. Today, I'm focusing on this Friday, February 14th, because I believe it encompasses everything, or almost everything, that is regularly featured in my videos, so we have a comprehensive topic at hand to explore. As a general review and contextualization of all those concepts, we'll explore how to apply them effectively, and my plan is to cover as many elements as possible from the entire course, including all previous reviews, consolidating into this single comprehensive review today. The aim is for clarity and understanding, following the order that it takes. That playlist of the course. So before we delve deeper or commence in that specific order, it's valuable to take a step back and examine what we were doing in a broader temporal context. To understand the market on a daily chart perspective since the beginning of the year 2025, it has been stuck in this range, oscillating without clear direction. And from this point, we weren't getting lower lows, nor higher highs, which was incredibly frustrating because we were stuck in a range that was hard to define any clear structure or pattern from. If you notice closely, the price started making higher lows and higher highs, indicating a shift in the market behavior. So basically, we couldn't define a structure or a solid pattern due to this prolonged range. The price action in this range was ambiguous and indecisive, leaving us with this and leaving us with this. Indeed, until when exactly, though? Until the crucial inflation report arrived, the final one we had at that time. Now, after this report was released on Wednesday, which happened right here, the consequences were felt immediately, because finally the very next day gave us a break from that pattern. If it had followed that pattern when closing on Wednesday, which was the news report, instead of having this candle here, had it been bullish, it would have failed to make another high and would have continued falling, right? But it didn't. The next day, Thursday, we already had this candle that it closed higher above these highs that had attempted to make new lows, signaling a strong indication of positive market movement going forward. This was a good sign because on Wednesday, when the market closed, the Nasdaq had taken the news highs at the close, showing resilience and strength. And if I remember correctly, the S&P hadn't managed to capture or achieve that same upward momentum just yet. There was a significant divergence observed right around the time the market was closing, which could have indeed served as a promising indication for potential future trends or decisions. Another downward movement occurred, but when the market opened the next day, there was a notable shift. Both the S&P and the Nasdaq embraced this continuation pattern. So, as part of my analysis, I've already applied the contextual information that I had mentioned to you earlier, and I will refer to it again later in this very same video. For now though, let's first focus on the first videos that talk about structure, which is the base of everything. You know, I always say that order flow is the goal of the analysis you should have. That's the objective. I currently don't watch structure. I haven't watched structure in a long time. It becomes more mechanical to the eye. It's like your mind does it automatically. It already knows what type of structure you're in, but order flow is what I want everyone to understand. I've always said that order flow surpasses structure. That's the purpose, but the idea of this video is to apply everything from the beginning, right? So what structure did we start to manage from since this break happened over here, since we stopped following the said pattern? And since Thursday we also broke upwards, we are seeing higher lows and higher highs, right? So A very clear structure began to form after the news was released, and as we continue to analyze its impact, there was no doubt about its influence. So at this point, getting closer to Friday, it becomes apparent that a first trap begins. We're on 15 minutes for those who are very blind to low temporalities. In 1 minute, maybe here in 1 minute, these people who are very blind to low temporalities may have seen a bearish structure forming in this significant drop, which might have been misleading them to believe something different, which will make them think this is going to be a structural change. Here before Friday's open, before the New York open. But if we consider this with a detailed eye and look closely, you will notice that all the impulses and pullbacks that we've been experiencing within this time frame have been valid pullbacks and crucial learning experiences, with the candle bodies consistently closing below previous bullish structures, followed closely by closures with significant bodies above that significant high point, then closures with bodies below the last few bullish candles that previously set a high point. And again, the same situation repeats here where we close with the body of this specific candle, therefore more than something purely mechanical, more than just observing which specific candle closed and which did not. The purpose of a valid pullback or retracement is simply for you to adapt to the price, making you delay processes of similar magnitudes to the time frame you are working with for the structure, because the price may make a small bullish candle here, then a small close below, and you validate that as a structure. Later the price comes here, and you think this is a structural change when in reality it was the price returning to the previous range. Continue. So really the purpose of valid pullbacks is for you not to get caught up in small things, but to observe the price in a broad, overarching, macro manner. In this perspective, the intricate topic of market profiles and expectations naturally comes into play. As previously discussed, there are specific moments when market participants take a high expectation-based approach. During those times, we have the opportunity and ability to observe the price taking action or making moves that may align with or diverge from those expectations. If indeed we have that body closing closely, because eventually, after a phase of accumulation, a retracement might appear, or manipulation might interact before eventually making said retracement, correct? It's a pattern of accumulation, followed by manipulation, then distribution. This is the cycle we could consistently expect whenever there is a break of a high, which is precisely why it's considered one of the worst possible moments to get deeply involved in the market environment with keen attention and focus, because this is the critical moment when people start enthusiastically betting, speculating, and wagering whether the price will continue its current trend or whether it will reverse direction. This is a time where those who wish to guess the reversal are particularly active in the market. Both camps are trying to anticipate the next big move. It's not optimal to operate from above, which leads us to have this ongoing accumulation process. As you can clearly see, we don't even have a body close anywhere near here, indicating the situation further. And there is only one. But this is an opening. This is a gap from an opening. Look at the time. This is at 1800 when the bodies are due to the opening of a candle, or the opening of a new day, or the opening of a new week. I do not take that as part of the structure. The same applies to intraday if I have, let's say, I don't know, an imbalance. I'll give you a quick example. Sometimes I have the imbalance and the price respects it. Sometimes there are candles that open with a gap. So the body of the next candle might have opened up here and then started to fall. And some take it as an inversion fair value gap. But I don't do that. I mean when it's a gap from the opening of the candle completely, that body, and I don't consider it significant in my analysis because, you see, it deviates from the typical market structure analysis. So here the same thing just closed the previous day and the next day opened with a gap. But this, after all, if we zoom out, is an accumulation phase, where accumulation generally takes place over a longer time frame, and in higher volume you don't usually see a retracement of this magnitude, right? So, early Friday morning, a close with the body below this level, suggests that those who engage in early trading might interpret this as a signal for a downward trajectory. The goal of identifying valid pullbacks is crucial, as it helps us understand that our last significant area of interest, be it our last trading range or swing area, was this indeed. Our most recent area was defined from the previous day's high. This phase was purely an accumulation stage until the price made its move upon opening here for the new day, indicating a shift in dynamics from the prior day's activity. Jueves en la noche, durante la sesión asiática, se alcanzó el máximo del día anterior, and then we started to fall. Notice that it wasn't even a sweep with rejection, unlike what we might have expected, which is another good bullish indicator. Instead, the price did the very similar thing again. It remained accumulating within the entire range of this candle. This makes it neither a valid pullback nor a breakout, because it was a rejection, therefore. This move here is not a change in the bearish structure. It simply accumulated, the price retraced. A less significant key level was touched here. It didn't break. What happens when the price fails to break a key level at the last moment? This is something I've mentioned in several videos, in several examples of my operations. All of this is taken from here, then from there. It was obtained that an MD accumulation manipulated, distributed. Notice that it did it in the opposite direction to what happened here. We meticulously take into account this high point, which has been accumulated over time, manipulated for our advantage, and then effectively distributed to achieve our goals. So that's the reason why, after breaking a high point, it is considered one of the significant scenarios there. That can be deceived more easily, that can be induced more easily, because the price is this kind of thing. Then they will know what things to expect once they get this, which are other expectations. If you know that after an accumulation usually comes a manipulation, a distribution, then they stay quiet while there's accumulation and wait for the price to leave this accumulation towards some point of interest. If I had a point of interest around here, higher than the accumulation, then I do nothing here. I wait for the price to get here. If I had a previous range over here at a lower time frame, a responsible one, I wait for the price to leave the accumulation, and from there I look for something once it breaks this accumulation to look for the opposite direction. Then we have a completely bullish structure. As you can see, when we have these bullish swings right now, with more context and more narrative, they become part of the news. So, talking about the news, what happens when a full movement of a news item experiences a reversal, and then, after such a reversal, we proceed to witness a continuation? That is giving us a very good indication of the higher time frame direction of the price because, logically speaking, taking into consideration the broader economic factors, the inflation data was released, and, as anticipated, inflation rose significantly. Moreover, the report came out higher than expected, igniting various market responses. Consequently, the market experienced a downturn at a point down here. As it reaches the key imbalance level, these fluctuations are crucial to monitor. It tried to go lower. It couldn't. It went up more. It tried to go lower. It couldn't. We were getting an internal bullish structure, and the imbalance was denying us the possibility of going lower. Therefore, this imbalance was failing to put a new low, so At the moment when the market closes like this and the next day opens and continues the retracement, that change in internal structure, the higher time frame makes this continuation on Thursday. It already gives us an upward context. Why? Because even though inflation rose, the market simply took this as a discount. What if the market had been moving sideways at this level to the left, anticipating a downturn? If there was an expectation for the market to decline, this report, which supports such a move, would have likely led to a continued decrease, given that inflation rose. However, it seems the market was merely on hold, waiting for a reduction to secure a better position. In the end, it prepared to go upward, making sense of how this news fits into our current understanding. This piece of information complements the continuation from the previous day, providing clarity and alignment for what's happening right now. Teniendo eso, ya pasamos por videos de estructura de zonas y que vamos a ir a zonas de nuevo narrativa, expectativas, profiles de perfiles, de mercado, etc. Ya tenemos todo eso bien. Ahora vamos a ver qué pasó el día viernes. Como tal, ya allí construyeron toda esa narrativa. Entonces, vamos a ver qué pasó. I'm not going to delve much into Asia. London you already saw here in the structure part. More or less what happened. An accumulation, and it came to the previous range that was around here. The price we lower one more time frame. You already know that I go between 1 minute, 5 minutes, 15 minutes, 1 hour, 4 hours. I don't use 12 minutes or 30 minutes or 45 minutes, nothing. I only use 1 minute, 5 minutes, 15 minutes in my analysis as it allows me to make precise decisions. 1 hour, 4 hours, and daily. But the ones I use the most throughout the day, every day, are 1 minute, 5 minutes, and 15 minutes. That's what I use. Most of the time, obviously down to seconds in my confirmations, in my trades, but my entire narrative of everything I'm always seeing from these significant time frames, specifically 1, 5, and 15 minutes. We go down one more time frame to see what happened here in the trading hub of London. The price fell right down to the level of the one responsible for breaking it. This high of giving a bullish structure on Thursday fell to that level over there. That factor had a small initial contact, and with this pullback, it remained around that area. Then it proceeded further. First touch sweep, and here the price was making it, so we start to understand visually how a change in order flow looks, a change in order flow beyond the mechanical part that I mentioned earlier. First a swing failure, then a responsibles break, then the flip, and finally the break of a validated area. From the opposite direction, in this case, if I'm going to look for a bullish order flow change, I would look for the break of a validated bearish area. So beyond seeing it in a mechanical way, it's about understanding that an order flow is happening in a direction, because every pullback in the opposite direction is to give us a continuation to the order flow direction, right? So if we have a bearish order flow, the price is simply following a pattern. It doesn't necessarily have to be like that. The price could go up, accumulate, and then drop, then rise a bit, accumulate, and drop again. It could be like that. Or it might develop in another way, like rise, fall, leave an imbalance, rise to the imbalance, fall, leave another imbalance, rise to the imbalance, fall. The price creates different types of order flow in one direction depending on the type of volatility. For instance, sometimes there's order flow where the price just follows a trend line or a resistance. So the price rises significantly, then falls. The price movement rejects immediately, but then rises again substantially, though it doesn't surpass the previous high. It rather respects it and repeatedly fails to break the highs, inching along slowly and maintaining this pattern. It's like a cautious, deliberate march, moving steadily until reaching a pivotal point where it suddenly takes off. Hence, it's essential to adapt and align yourself with the current actions of the price as it unfolds. In this situation or scenario, we observe in this downward movement a decline with significant behavior or trends from at that exact moment, precisely when the price trajectory became strikingly linear or consistent, that we are able to observe it distinctly and try make an attempt to draw several multiple, potentially insightful, conclusions. First, the first pattern I can identify started here since the sweep. Since the market sweep happened, let's take a closer and more detailed look at every bullish candle that the price action created or formed. It's quite interesting to note that literally none of them, not a single one, as I have examined quite thoroughly, managed to close above a bearish candle. It's crucial that this particular bullish candle should have closed above the previous bearish one to indicate a potential upward trend reversal, and frustratingly, it didn't manage to do so. Similarly, this other bullish candle absolutely failed as well to close above its preceding bearish counterpart. This bullish candle didn't close above this. This bullish candle swept, but still, it did not close when we expected it would. This bullish candle failed to close above these levels. Unfortunately similar to the others, this one didn't either and kept disappointing. This one didn't either. This bullish move didn't either.
Where do we already have something different?
And what a coincidence, after the sweep. So here one says something different started to happen. And another thing we can see, imbalances here. Left one didn't touch the price here of another. If it touched and continued here, another didn't touch here, another didn't touch here, or one. And it closed but hadn't closed above that bullish candle, and we hadn't yet had the touch of our point of interest. Remember that you have to wait for the sweep before starting to look for an entry. If I operated a mechanical model here, for instance, I would have a stop loss by operating a bearish imbalance close. For not waiting for my point of interest. Then imbalance here closed one and still continues the downtrend, but we hadn't had that close above that bearish candle. So by imbalance pattern here it would have tricked us. Because here it stopped repeating a pattern it had been doing consistently, which was respecting imbalances, not touching them. So here at this crucial point, after the price eventually touched the imbalance area, it signaled a change. Our point of interest closes once again, and this time it managed to close above the prior candle, indicating there's double confluence. Moreover, it left behind a bullish imbalance, which is notably the first bullish imbalance generated throughout this entire drop to our point of interest. Such a development often signals a continuation pattern leading from this point. So, as we analyze the current situation, we are prompted to ask ourselves, what exactly do we have at our disposal here to work with and interpret further? Change in what the price had been doing in a bearish mode. Then beyond, you starting to see the price making a pattern or another pattern. Check what the price has been doing. Read the price. Don't be so mechanical. What is the price telling you in such a way that if you're looking for longs, don't start guessing the point where it's going to be the long, but instead look for the non-repetition of what the price had been doing. So, the price had been doing this to me where every bearish candle was being respected with the body of a bullish candle that is passing at this moment already gives me a first indication. Then here the bullish imbalance enters and respects it, and the next candle closes solidly with a body showing good upward momentum. I can now distinctively observe a notable change in the flow of orders in the lower time frame, which could indicate a possible shift in the underlying trend direction. Before each bullish retracement, we were getting new lows. What happens in this bullish retracement that tried to set a new low? It failed and gave us a new high. Right? So there's the first confirmation pattern. Swing failure. Swing failure, here. Okay? Then there's the one responsible for breaking that pattern. In turn, we might be able to perceive this as the one held accountable for leading us precisely to our point of interest, where we could initiate this first contact or interaction. So, in some sense, this element should take on the responsibility of that role, considering that this significant event or decision here indeed validated and confirmed us in this context. This is the NDI, so this may be our last ND validated before we actually embark on the process of starting the order change. And as we reach this particular point here, the price experiences a pull influenced by these distinct jumps in value. It's as if it's been accumulating momentum from several preceding weeks, gathering strength and forming this pattern of movement. So, with certainty, one cannot see from this temporality what the ascent was as such. But the last bullish candle to take this ascent was this one. And if we look at it this way, we had a close with the body above it. So in turn, this is responsible for breaking a bearish area, validated by order flow, validated by a continuation. So this was an initial touch, and the fact that we break this area and break this means that the price denied the possibility of forming a double top to continue downwards. And from here it continued upwards again. So the change of order flow is already in place. The price respected the one responsible for the last valid swing we had in 15 minutes. Because this was accumulation. Because this was accumulation, then that was our swing to consider. Well, so this is how I want you to read an order flow. A change of order flow. I have a video in the course called How to Read Order Flow to Execute, just going candle by candle, function failure. Then seeing that function failure, one defines a direction, but notice it is something very similar. But on this occasion, adapting to what the price is offering at the moment, because I have seen people become very mechanical with functions, with patterns, and that will not fit in all contexts, in all types of market, and in ways the market is moving rapidly and unpredictably. However, by being able to skillfully read what the price is currently doing and intuitively looking for a change from what it was doing before through a detailed analysis, it will make it considerably much easier for you to adapt strategically to any type of market condition that arises. So, well, that's what we had before the New York opening, pressure building for radical shifts, a completely bullish context. And now let's get, without delay, to the price action for when I trade once all this comprehensive review is first thoroughly completed, taking into account every detail meticulously. Thing I noticed when I came around here at 9 and there was news at 8:30. A news event that did not create any significant imbalance or continuation, just manipulation in both directions, effectively keeping the dynamics neutral. Usually on these types of days, especially when the market is consolidating or lacking direction, I expect a price action that doesn't deviate much from the current price levels, but rather one that tends to sweep the liquidity in the market, react accordingly, then sweep again, and react. This pattern becomes evident as the market attempts to reconcile orders and positions. Otherwise, when the price presents news that moves significantly far from an imbalance, then I do tend to anticipate more linear movements, more predictable and steady price action. So that was the first notable observation I made. I saw the price return to that news area, which was crucial because it signaled a potential continuation, and indeed it did persist. Then, later on, it arrived at this point, maintained its pattern, and continued again, establishing a recurrent behavior. Right before the opening, it showed an attempt to move away strategically from this designated area, which prompted me to take a first operation, and that the price reached this level. Around here, I executed my first long trade. I was keen to take this short position but refrained from being overly aggressive because it developed very quickly and rapidly. Exactly a minute after the opening bell, the price managed to reach the 50% mark of this little flip here in London that caused that drop. Only that as the momentum was so aggressively upwards and fell immediately, I couldn't get in. But having this as a target, because this is a first touch at the moment when the price gives us, it was bullish and closes with a body here. This is a first touch in this area around here. There was one too, in fact this was already the sweep, just not anymore, but the minutes before the opening. I always do, but after the opening bell sounded, I hadn't taken this trade opportunity, and here was the 50% unmitigated risk level. I took a first trade with cautious evaluation, and the price kept accumulating, building pressure in the market. When the price started showing indecision, which was unexpected, I took a moment to review what exactly the SP was doing in response to these movements. And it turns out the SP hadn't even reached remotely close to that specific area in the market, nor did it take out or test that low which the Nasdaq did manage to achieve. And from my particular entry point, exactly where I had entered in the Nasdaq, which was a critical decision point for me based on my analysis. The SP went straight up, meaning that if I had actually taken that trade in the SP, it would have already been in profit by now. At that point, I realized it was going to be a very interesting day for SMT divergences, something I've talked about in several of my market reviews before. I don't explain it in the main course content because, in my opinion, it basically requires an entire course dedicated just to understanding that concept thoroughly. It's not something simple or straightforward that I could explain in a short video, and hence it's not included in the course syllabus. However, I do provide a basic explanation and touch on it in several of the market reviews, so traders can gain some initial insights from there. I observed this, and from there I spent the whole day watching both indices. So it gave me a great deal of peace of mind, this sense of calm and composure, to hold on to the trade. Although I must admit I was a bit annoyed, maybe even slightly frustrated, that I just entered Nasdaq, and it remained stagnant like that, while the SP took off, soaring upward. It was a bit disheartening but not entirely unexpected, especially knowing that in the last few days, perhaps over the past few weeks actually, usually, my first trade of the day has been in the SP, and I have been doing exceptionally well, like very well indeed with the SP, especially with that first trade. And just on Friday, when I wanted to start with the Nasdaq, it stayed like this, and when I looked at the SP, it had already moved. So the first trade, in the end, I held it, I took profit around here, and once it got out of this accumulation, it was just to avoid a drawdown. I don't like it when I'm in a trade and it starts to accumulate. And I had already capitalized on that opportunity, you see. Typically, I like closing positions immediately to steer clear of a downturn in my account. The very first trade went directly upwards upon initial contact. There was noticeable divergence, so we entered a long position. At this point, I'm not seeing any further opportunities, correct? The Nasdaq, in particular, wasn't showcasing any noticeable imbalance or asymmetry as initially expected, right? And that's ultimately where I decided to take a trade in the SP. During that time, the SP continued to rise steadily without much interruption. It was accumulating quite significantly up here while the Nasdaq was just struggling to keep up or maintain some stability, sweeping away the high we had since the opening. I was just cleaning and sweeping up the market while the SP was already way high up there, steadily accumulating value at this point. At that very precise moment, I find myself deeply immersed in the DRW, focusing intently, at this very moment in time, on these sudden, unexpected shifts in the market dynamics. Where the SP was already accumulating and the Nasdaq hadn't been able to break, clever manipulation was done behind the scenes so the Nasdaq could break that opening high and at the same time distribute in the opposite direction to strategically return to the previous range. And for the SP to come to this imbalance, then watch the video on imbalances, accumulation after a significant strategic move.
Esperen a que el precio vuelva a un desequilibrio que dejó. Este fue un trade que no pude tomar porque no encontré una confirmación rápida en segundos en el SP. No me gusta buscar confirmación en segundos en el SP, pero fíjense en esto. El SP tocó este desequilibrio y lo respetó, mientras que el Nasdaq se quedó.
A bearish imbalance just like the Nasdaq had not left here before. It indeed left a pronounced bearish imbalance at the precise moment when it made this exceptionally strong retracement, retracing to this area here. It reached back to a certain flip that happened at this point. There was an initial flip touch, almost an embrace of it, and it went ahead to reclaim that. And by doing so, here we closed that imbalance. The imbalance closed. The next candle came, touched the reversal, and I already did a scalp on the Nasdaq there. And finally it continued. The Nasdaq is known for its rapid moves, and this was a typical case. Now look at what the price is doing again. If I want to look for shorts, instead of rushing to predict its behavior, I'm not going to rush to anticipate it. I hold back, wait for a clear signal from the price, as it is making pullbacks, letting the price action guide my next move. These small retracements give insight into the market's next move, so it's crucial to stay patient. When it's making quite deep pullbacks, significant pullbacks, what does this mean? Basically, it indicates that I'm not going to look for breakout longs at that moment. My approach will adjust based on the price action, and this is a key component of my overall strategy. I'm not going to look for longs here, I'm not going to look for longs here, I'm not going to look for longs here, right? I'm going to wait for the price to make a deep pullback, right? I adapt to what the price is doing. Now, in the upward movements, the price was rising with some fluctuations and continued upward.
Deep pullback, very direct upward movement. Now, what's happening here?
Específicamente, ya que no existe una continuación tan fuerte al alza como antes, noten cómo el precio intenta alcanzar un punto alto y luego cae por debajo de ese nivel bajo, y lo mismo trata de repetir al intentar alcanzar otra vez un punto alto, fallando posteriormente, cayendo nuevamente debajo de otro nivel bajo. Este fenómeno es visible también en el SP500.
And already in the SP we began to see more weakness, because here comes another divergence, a clear divergence, so pay extra attention. Then the price really fails to rise significantly, and that results in a critical market situation.
That high, indeed. Twice you go make that stop here. It had already made a much more considerable pullback previously, so it was a very good entry point or technical setup for the price to have gone up significantly. It was akin to a double bottom formation that this investment opportunity had shown, and at this point, unfortunately, it failed.
Notice how it started repeating a kind of downward pattern. It began respecting those jumps.
Now, let's carefully pay attention to this particular low point that we're observing at the open. Notice how the Nasdaq moves upwards to this level right here, but it intriguingly continues respecting those lows, which is quite remarkable. And observe here in this PF. The SP showed much more weakness than expected as it continued to drop, and even went as far as to take out the low of the open for the day. So eventually, with this downward move, it finally gives us a clear sweep of a first up opportunity that was demonstrated in the chart.
Este también había sido un first up, mientras que el Nasdaq estaba sosteniendo
mucho más el precio más arriba, por lo que esto también es bastante buena herramienta para tener en cuenta en cuál de los índices podríamos llegar a tomar una operación en el futuro con más seguridad.
The Nasdaq was notably stronger during this particular period we were observing, while the S&P, on the other hand, was exhibiting more pronounced signs of weakness. Consequently, we detected an early divergence between these two major indices. This divergence occurred as the Nasdaq, during that specific movement, was unable to breach its previous low, whereas the S&P successfully did so, managing to surpass its low point. As a result of this distinct difference in performance between the two, it presents a timely opportunity to analyze, in detail, and potentially make strategic trading decisions based on that analysis.
Putting on the change-seeking lenses once more, I'm inclined to make a long trade on the Nasdaq because it's showing more strength compared to other indices at the moment. There's an opportunity to find a rapid order change. Now, I initially aimed to do a short trade here, but the chance slipped by before I managed to enter. It got away from me.
This is a trade I really like, displaying a flat candle without any visible wick and noticeable imbalance. Over the years of trading, I had several trades, similar to this one, where I usually position a sell limit there, when I possess enough confidence and conviction in the price direction. But unfortunately, this particular trade opportunity slipped by me. It was, in hindsight, a solid short opportunity on the Nasdaq market.
Anticipating that swing failure because the price was in a lower time frame swing uptrend, it reached this point where it failed, and with the body close, then the next candle allowed us this imbalance. There was also this volume gap, which is a good indicator, and well, this went by very quickly. Now, as we see the flow change again, I can quickly see the price making bearish movements.
Pullback, and after the pullback it makes new lows. Pullback, new lows. Pullback, new low. But here we already have a rejection. Notice we were always closing with the body after each pullback. Pullback, close with body, pullback, close with body.
Same here. Made an attempt at a bullish swing, failed, closing with a body. Here we have an initial indication right in this candle where there was the sweep in the SP of the opening low that the Nasdaq didn't do. The Nasdaq kept holding higher lows. We had this rejection. Now after the rejection, a new swing attempt to the downside was made
and failed to establish a new low level. So now we've reached the quickest confirmation we can have. A clear swing fail, which means it failed to establish a new low. There's our distinct change of order flow happening right there.
I have many people who simply place a buy stop on this from the point where the price starts to be the new. Trying that new there, they have a buy stop, and immediately with that they go. Others wait for a close above this, so there are various ways to enter, and there is our change of order flow. They go set a new low, closing with the body above these downward candles that it made here. Here it also closed. This is quite a good indicator, and from there the price began to move. And here again, we already got another divergence. The Nasdaq is stronger, and the S&P weaker.
The Nasdaq reached a new high. However, the S&P 500 did not follow suit. So at this point, I made the decision to execute the gunshot strategy, specifically on the S&P 500 index. I approached this move with a sense of urgency and aggressiveness. I honestly can't recall if it happened during the sweep that I was intensely observing down to the second level to catch the precise moment.
And it was quite good, in fact, but I had to close it very quickly because I didn't want to face the bullish order flow that Nasdaq was showing at that moment. And then, without wasting any time, we had another divergence, and this one was a much cleaner failure. Later in this discussion, I'm going to take some time to show you precisely why and explain every detail so you can understand better. First, the price lingered for some time up here, which definitely indicates to us that we are leaving this trend behind.
Bullish imbalance with its strengths and weaknesses. We noticed we had this 5-minute imbalance, indicative of market fluctuations, from which the price tries to set a new high consistent with previous patterns and expectations. It, however, fails to set a new high then again, possibly due to external factors or market sentiments. It leaves us this 5-minute reversal pattern, and moments later, in a minute in that attempt to break through once more, it simultaneously.
To rise, it leaves us a bullish imbalance, and the same thing happens again after touching the 5-minute imbalance. Returning to the previous range, it makes that attempt goes back to the 1-minute imbalance, makes that attempt too. Wow. Then it starts to decline as the 5-minute impulse begins to fall rapidly. Within just a minute, we close this area of imbalance, quickly returning to the reversal phase, and then it continues to descend again. And this was another trade opportunity I eagerly wanted to make, but I executed it on the SP. This decision was made precisely at the very moment when the Nasdaq was giving me significant confirmations, as it often does. I prefer these confirmations on the Nasdaq because I feel that they are based more on algorithmic patterns. I was executing on the SP, and then it entered this noticeable imbalance accompanied by a volume cap. And it fell from there. This was notably very similar to that entry we see here. So this particular scenario was much cleaner without complications. This one had failures and a noticeable change in order flow, and additionally this had mismatches or imbalances. See that both things work if we adapt to what the price is doing, and here the price.
I believe that in the SP it was already much lower indeed. And finally in the SP we reached where the Nasdaq was initially, where I went long on the Nasdaq. Look how nice it is. So, in that market review where I talk to you about divergences, I sometimes tell you an index is already mythical or something, while the other one has that pending. That's where divergences are going to show. Why? Because the index that already mitigated that is going to stay with greater strength, while the other index goes and finishes mitigating. Then look at how the SP came to that same level.
And that's it. And it gave us a significant upward movement, a movement that allowed us to take advantage of specific market conditions. So this was where I strategically decided to execute the shorts. We had a clear higher time frame bias with strong closures that had large bodies. And it was at this point that the 5-minute reversal pattern or strategy was coming into play, creating opportunities for potential gains. Here I did another short. I got into this because there was a flip phenomenon occurring around here, and this served as a first touch point that initiated a continuation of the trend. My desire was to enter there, as I identified a 15-minute imbalance left by the price action. This imbalance is currently remaining here, providing an opportunity or setup for potential movements. This 15 minutes stays right here. The price had reached this area we had been observing closely, the one where I initiated the short position. I had been on standby for the price to even out that visible imbalance, and we found ourselves with a 15-minute window to establish an additional contract. My thinking was to introduce another contract to the downside there because, given that the SP typically exhibits significantly fewer points in comparison to the Nasdaq's behavior, I found I was comfortable assuming that added risk factor. And around here the candle had managed to close. 45 minutes, so carefully observe these minutes. Here it opened when the clock showed exactly 30 minutes, and here it closed at the 15-minute mark, exactly at this point in time. Therefore, the highest point reached during this session is indeed this one point right here. And I was anticipating that the price would close the 15 to come to it and hit the 15-minute candle, touching the imbalance that was left there, the one we just saw, and add the other contract. It didn't, so with just 2 minis, I took TP here for the same reason I told you. Now the price started to accumulate before taking this, then just made a move on the seconds chart to the downside quickly, and I closed to avoid a good decision here.
I didn't want to short, despite my initial idea for the price to reach the 15-minute imbalance and add the other contract because I had already completed the operation, and because I didn't like how it arrived at.
Although the price exhibited aggressive pricing at first, at the last minute look, it didn't manage to close the imbalance as we expected it might. This isn't truly an inversion, which means the price needs to close above that level, but it merely respected the level without doing so. In fact, this scenario is typically regarded as a good bearish signal whenever the price reaches an imbalance and then, at the crucial last moment, it doesn't close it. This often makes for a good, quite aggressive trading opportunity. However, so look, the SP was much weaker, which is why I ended up shorting the SP. It's something I'm keen on and quite used to, particularly shorts from that sector. It was obvious that the Nasdaq was the one actually holding the price at a higher level, resisting the expected drop. And there was a significant last divergence that took place right before I made the decision to stop watching the market closely. So in that other downward movement, it's essential to notice that the Nasdaq, interestingly enough, never managed to break below that low point, which the SP did breach quite notably. And at this crucial point, once again, is exactly where the shift in order flow becomes evident and apparent to any observers. First, we have a divergence showing yet again here. Notice carefully that the SP, in its weakness, it managed to catch that last low while the Nasdaq didn't manage to do so, and from there onward, it gave quite linear and clear longs. At this specific point, I had already left my measure there, feeling assured of my position. But I wanted to showcase to you just how remarkably interesting and fascinating, almost algorithmic, the price behavior becomes on days like these when the market is not progressing in a simple straight line. This is really something to observe. But rather the price is coming to interact, and this is usually called a wrong price action market by people, but look how beautiful everything has actually been. So, well, up here there was more. Here we have two 5-minute imbalances. Remember that I tell you that when the price is moving away and leaves them behind, it starts accumulating, start to move up in time frames until you find an imbalance. Since there are two 5-minute ones, we move up to 15, and this way we can calculate and time better, be more precise, when the price is going to make a sweep, or when it might, even in the slightest, give us a reactionary bounce. So, right exactly at the precise moment when the 15-minute one closed, exactly at that time, it went down to look for that significant imbalance, and from there, it ambitiously continued its rise in price, slowly gaining momentum, unlike in the SP where it just simply remained static down here without much movement or any significant action. Despite doing the same, it accumulated, while Nasdaq was way up there. This is already an ICT breaker over here. Breaker, and there was also imbalance in the system. We have it here. Oh well, the one I have marked there, in fact. It touched the wine. So it accumulated, manipulated slightly. It wasn't a major manipulation, to be honest. I would have liked to see more manipulation towards this flip, and from there to the distribution. But anyway, that's how the day ultimately closed. So I sincerely hope that this, what I've explained to you here, can help you a lot in your trades or analysis. I would have liked to touch upon as many topics as possible. There's so much to explore and discuss, each topic more engaging than the last, but unfortunately the video is getting quite long. I think what stands out most as vitally important is the section on order flow, specifically how to read the current price and comprehend the initial context narrative. All of this varies a lot depending on the weeks and the type of chart we have on a higher time frame, so in regards to those aspects, yes, absolutely, it is very crucial. With a lot of experience, but each market review is precisely for that, to provide you with experience, so I hope you really appreciate that content which might be useful for you. Bye-bye.